All right. Quick update on the cycles and the chart pattern. I covered this on the first video that I ever posted to Tradingview. So I'm gonna explain a couple things on this chart and why this point right here is a critical point. 43,000. So let's zoom in into that area really quick. So this is an indicator called the pivot tool, and pivots basically allow you to see a range, right? And so using the pivot tool, uh, this right here is considered the pivot zone or the base. Anything below the pivot point is considered support. That's why you see the letters S1, S2, and S3. So this is support 1, support 2, support 3. If you launch this from indicators, you don't need to configure anything. I usually just pivot points usually show all the way back. I just show the current one because I'm not really interested in previous pivot points. So I always look at this. So this is resistance 1, resistance 2, and I always just leave it up to 3 resistance and 3 support lines. What that means is that below this line, it's considered the direction is going to be down. Above this line, direction is still typically upwards. That's why we call it's going up, it's resistance, going up, it's resistance, and then below this line, it's support. However, if the price were down here, it goes above S1. S1 is considered resistance because it's trying to break above this line. So this becomes resistance, and above it, if it's dancing on top of it, then that's when you call it support. Now, the reason I bring that up is because um, the flag pattern is playing out the way it should. Where is it? I was talking about the Elliott wave rallies that you go 1, 2, 3, and then somewhere here 4, and then 5. So we're expecting to see an ABC correction, and I explained in my last video this line here, and I said there's 2 ways to look at it. You can do a Elliott wave uh, ABC correction if you wanted to look at it from a clean perspective, say A, B, B at this point, the 51.8, all the way to this point is C. But then within it, you can also do an A, B, and then C. So if you start from here, that means your ending point is somewhere here. So I'm not going to go over that. That's on the first video. That's just a quick reference of where we're at, why I'm going to cover today something different. Right. So if you're looking at this area right here, these moves, notice how it's moving and how others moved. You will get days, and this is on the daily chart, by the way, for Bitcoin. As you go up, you get pullbacks, pullbacks. It's not a straight line. It never is a straight line. If you notice, nothing is ever a straight line. If it's a straight line like this, that means it's a strong rebound, and it's usually how it works. Like right here, you see it dropped and boom, bounced right back. Same here. It like this was a failed one, but the same goes straight up, goes straight down. That's just how it is. So with that in mind, the area of potential concern would be right here. So I'm just gonna put it at here. This point right here, pivot point, which says 43,651. That area will be a big marker. It'll tell us if it goes up or if it goes down. If this flag pattern is going to play out, the one area you want to keep your eye on is 43,602. Now, I'm still of the opinion that it's going to break it and go further down, completing the flag pattern. So if I were to use a reference point here, I'll say from this to this, and then what is it? I'm just copying the line so I have the same distance. Put it right there. See? From here to here is when this is the flagpole. So that means from here to here, copying that same flagpole completes the bear flag. So the completion of the flag should be at around 29,000. I'll say 30,000 to keep it easy. So um, when you have this completed, the idea is what happens after this. So in order to find out what happens after this, we need to see how we get from here to here. So if we bounce off this, and let's say we moonshot for some weird reason, which again, I don't think so, but if we somehow moonshot from here, the pattern is voided. Makes no sense to me if that were to happen, but the only way that that can happen, I'll just level with the bulls right here, just because I know that they want to hear something bullish, even though I'm bearish on this. The only way we can go up like this and beat or go beyond 51.8 is if the war in Eastern Europe of Russia and Ukraine comes to an end. And quite frankly, I don't see that coming to an end anytime soon. Now, I know a lot of people would say that that shouldn't matter, it should not have any effect. I believe it does. I've noticed that movements have been in some way correlated to that, and geopolitics do take some sort of effect into cryptos now. So, anyways, what is the projection right now? The idea is this: 43,573 actually. Let me see if I can just put a line so it's always marking it right there. So 43,631 is your if we're gonna quote unquote rally, it's got to crash into this and then bounce. But if it goes below that 43,600, going below that kind of will solidify that this is gonna go down here into closer to 30. So for the bulls, there is one last area of hope, but I'm not optimistic, and I'll show you why. So in this video, I want to talk about these orange lines. So these are Fibonacci lines, these orange lines, and I want to do a quick historical reference. This is what I call not what I call, but what it's called the Fibonacci top line, Fibonacci midpoint, and the Fibonacci lowest point. This is basically an indicator. So if anybody wants, just look up the Fibonacci lines. You'll find this indicator. I'm not going to go into detail how to set it up. You have to do that on your own. I'm not doing everything. So what this indicator does is the way I've learned to use it, below the midpoint Fibonacci, you're in bear zone. Above the middle point Fibonacci, you're in bull territory. Now, you know how people are always saying, oh, we're going to 100K. Well, Fibonacci would void that. Fibonacci here says the maximum you can go, even if you were to spike, it's 73,875. And the lowest you can go, which again coincides with my theory, is 23,141. But the reason I put this line here at 20,000 is because, again, historically, when you go, you see right here, this is the only reference as to why the 20,000 is also a support. Up here, it hit it once, hit it twice, hit it three, and then boom. So now we know that 20K is a significant number, but here it's considered support. So anyways, going back to the chart, I want to do a quick historical note here for people. Anytime Fibonacci has been breached, historically, when you breach the maximum top line of Fibonacci, the price tends to retrace pretty violently. Okay, so let's do a quick, just right there. Breached it, dropped. I think this would be the point right here before it turned up again. So it's like a V kind of thing. So breached it, dropped. This was a mini breach that dropped it. I know there's more significant. There it is. This is a significant point. In December 2017, it breached the Fibonacci maximum price, meaning the Fibonacci lines are like how far you can stretch something. Think of it like that. So if you have a rubber band and you stretch it, you know that it's gonna want to go back to its original form. So think of it like that. Fibonacci is how far you can stretch the price up and down. So in this case, we began the breach right here. So for people that were following the Fibonacci, they knew that this was a risky area. So see right here, boom, but it kept going, then boom, but then the retracement here, it just kept going. So the longer you breach, the stronger the retracement. And that's something you just don't want. And let me see. I don't think I have more references. Oh, yeah, right there. Breach, drop, breach, drop. Anytime, yeah, breach, drop. Now you might think these are tiny, but back then that was pretty significant. This went from 600 and something all the way down to 290. So for somebody that had significant money, that was a bit of a big drop. So anyways, I'm using that to explain how this works. Now, notice this break. It says it could correct all the way down to like this goes beyond zero, so it would be like right here where we would stop. But if you go -0, that's when you get the 0.0000 something. Those numbers, that's when that happens. I don't see that happening anymore. But just remember that I am keeping an eye out on the Fibonacci top again. Anytime you breach it, the correction is pretty extreme. So now we go into the cycles. Cycle patterns are on track saying something is coming in April. I don't know what it is, but something is going to strike. Now, I want to see if I can get a reference point just to show people. Wait, I may have messed up there. Okay, here we go. Let me go back to this in case. All right. I was going to show a historical point, but I don't want to take up too much time. I'm already at 10 minutes here. Um, so what do I see happening here? This is the only point that people should consider important right now. The 43,631 is the line in the sand, right? The bulls want to continue the rally, then it needs to bounce off that. But if it goes below that, then yeah, this flag pattern will complete somewhere into the 30,000. I know a lot of people don't want to hear that, but again, it's Elliott wave. It's how I see it playing out. It's a bear flag. It completed the 5 rallies. It's supposed to. If we go by the historical pattern, it's supposed to crash down. All right. Now, people say, how are you sure that it should continue down? Well, on my Reddit and Twitter account, I kept saying for a minute that the indicators don't agree with it, with any rallies. So here we are. We just completed another day. So we started a new candlestick. And notice the charts. I aligned them. So what I do here shows up on the charts. This indicator right here is one that everybody should know. This is the MACD, the moving average convergence divergence. Basically, when the prices converge with each other, it's a signal of a reversal. So at this point, let me do this so that people can see an actual visual of what I'm talking about. If I were to go look at the, whatever I do here mimics over here. So on this one, I'm going to say right here, around there, March 15th, when we got a golden cross on MACD, this signaled a rally, right? And so that's what you see in here, this little time frame over here. It rallied. Problem is, notice it's stalled out here. So you're saying, how do you know it's going to go down? Well, this is an indicator, and these bars are saying this is supposed to continue downtrend. You see? So if you want to project this out, you can easily just playing around. This is by no means how to do it, but you can do something like this, and you can play around with this and just put a line like that. It's a very cheap way of doing a projection. I don't recommend you do it, but it gives you an idea. So I'm going to delete this and I'm going to create a new one. I should just move this one. So I'd say we move this over. There you go. April 4th. So April 4th, we might see a convergence, and this is what we would call a death cross. When you see a death cross, prices tend to accelerate down. Kind of like right, what happened here, the reverse of golden cross, price accelerated up. If we get a death cross on April 4th, this will probably accelerate the price down. And so again, the theory is this flag pattern will come to fruition. So again, I'm not saying it will, but this is a projection that on April 4th, give or take, if we see a death cross there on the MACD, yeah, you can expect this to happen. Oh, I should have deleted that. I don't want my charts to look like that. Okay. So now I'm gonna leave it there on April 4th. So all other indicators, I'm not gonna say the names of them because I'm not even sure if I'm allowed to be showcasing like this, but I don't care. So all of these are still above or at the top zone. This is the only one that's been breaking. I think this is the full stochastics. This is RSI. This is just stochastics. This I'm not going to mention because I'm not even sure if I'm supposed to showcase it or if I'm allowed to, but whatever. So these are still signaling that we're topping. You see, it was beginning to go down here, which is where at this point it was going, but then it recovered. Um, but it's still at the top. It's not the maximum top, but it's still at the top. So we still have this in order to say bounce. If you were to say at 43,631, which is this line, if you want that to recover, all indicators, all of them, must be at the bottom. All of them. In order, even the MACD has to be like, um, if you were to say this has to bounce from here, then this must be looking like this. So, and I know that if you have a free account, you can use 2 or 3 indicators. So if there's one indicator you should use, it's the MACD. So if you want to know if when you get to this point, the 43,000, if it's going to quote unquote go back up, you want to see this kind of setup. If you don't see this kind of setup, uh, yeah, the likelihood is that it's going to continue going down. So even if this crosses or if it goes up like this, it can go, it can just continue. But again, cycles disagree with that kind of pattern. So cycles are more in line with this is supposed to continue down. So I still say the flag pattern will play out. I might be wrong, but I mean, it's difficult to argue when you have the 51.8 being a strong, annoying resistance line. And then it's also difficult to go above the middle Fibonacci line, which is also strong resistance. It's difficult to go above the trend line from the flag pattern. And then you have the pivot point resistance right there at 50K. Yeah, at 50K, that's another resistance. So you got 1, 2, 3, 4 major things you got to break through. Whereas if you were to go down, it's really just breaking below 43K and then you're on your way to 39, which is 40. Then you're on your way to 37. And then next stop, 32. Final stop, in my opinion, should be 29. But how we get to this point is what I want to know. So for right now, all indicators still signal that downtrend is coming. Again, I just monitor the charts. I use the full subscription, the premium, which allows me to have I forgot how many indicators, but it's like 15 or 16. Just so everybody knows, I use roughly 40 indicators. So this is just, I call this the first pass. But notice if I load a chart, I'm not going to load it, but you can create multiple layouts. I have about 7 right now. So each one has a different way of looking at things. So I not only use these, I also use other indicators. They also signal that this is a critical point. 43.6 is for the bulls. That's where you want to bounce from. For the bears, you want to go below that. And right now, all indicators on this one are saying bears have more odds of success. All right, everybody. I don't know if I'm going to put more videos. I might. Kind of like this style. So good luck. See 46, 245. It's trying to rally. Let me see if I can just put it full screen just to close out. Yeah. See, it's not a straight line up, but it's also not a straight line down. So good luck, everybody. The point to keep in your mind, it's 43.6, and that's using the indicator called pivot tools. So if you want, I would recommend everybody start using at least this one. It's built in. It's not a custom built indicator. So that's pretty much it. Good luck, everyone.